Hello active traders, and welcome to this week's broadcast of Trading Week Ahead. I'm Ken Calhoun, your host, coming at you live here on Saturday, May 19th, 2018. Great to see another epic turnout. We're up at 5,215 of you, so a new record in terms of people registered for these events. I wanted to thank all of you for being here. We've got a really exciting show coming up for you right here, right now. As always, all information is for educational or information use only. I'm not making advice about what to buy, sell, or hold, and by watching this, you agree to not make actual trades but learn instead in a safe learning environment using a demo account. I wanted to start off today just by saying thanks to the 400 plus of you who registered or replied to the survey, the Trader Success Survey. Interesting response. Over half of you said you're not buying anything anymore. Many of you said almost 90% said it's important to see preview video clips. These are survey responses from over 400 traders who just took my survey recently. You guys love the idea of the $7 trials, so that's good to see. Not so many of you doing options, advisories, or other trading rooms. And one that really touches me, I really appreciate that you guys gave me really high marks on honesty and trustworthiness, a combined rating of near 70%, and good rating on ease of use of websites. So these are results from the survey, in case you're curious of what 400 other people said. Course selection and variety, webinar easy to understand. I'd like to see this number go up, Ken Calhoun compared to other educators. So I'm 70% on the good to outstanding, but I'd like to bump up this outstanding number. So we're looking for ways to improve how I structure the content and what we cover. So anyway, thanks to all of you for the survey participation. So we'll continue by acknowledging our traders of the week before we jump into our charts this week. Richard P., I wanted to say thanks for your comments in swing scans, and John O. for your comments in Trading the Open. Our quote of the week comes from Mark Twain, who said, "The secret of getting ahead is getting started." And as a trader, one of the things that I want you to start thinking about is how to get started with more intelligent, consistent charts. So many of you ask me, how do I become more consistent as a trader? Well, number one, learning risk management with really tight stops when you're wrong. Number two, learning the patterns that work. And number three, implementing or taking action on those patterns using really strong charts, right? Good skyrocketing charts that are consistent. So we're not screwing around with squiggly line crossovers and trying to outguess the market. We just want to buy strength, buy high, sell higher. Coaching tip of the week is look for charts with large recent green candles, and we've got lots of those lately, right? The first tip is to confirm breakouts with high volume. We've got a couple more tips coming up for our Swing Scans members. If your trading losses make you or your family say, what the heck, let's look at a better way to trade, and let's take a look at intelligent, focused support and resistance levels in our market and start off with that. Here is our 90-day S&P candlestick chart. You can see what I like about it is that we're holding support at, this is the 100 simple moving average line. So we're holding support right above that. It climbed up above the 100 simple moving average. Is it going to collapse and drop back down next week, or is it going to continue to skyrocket on up? Inquiring minds want to know, including us, right? We've been on a rally lately, but it kind of slowed down last week, so be cautious next week. Our R1 level is 27.52. So I'm going to look to aggressively start to get back in long for swing trades if we get north of 27.52. And the short trigger, or the S1 trigger, the support level, is 26.94. I always take notes so I remember what my levels are. So we're going to see what the S&P does. One of the things to pay attention to is relative strength of sectors. The three sectors that have been the strongest lately have been oil, energy, and pharmaceuticals and biotechs. I'm currently long in USO, UCO, oil, NF. They're all really good charts. They've been going up. What I like especially about UCO, I put in another buy stop order in my Fidelity account for UCO in my actual live real money trading account this morning. One of my 3 live real money trading accounts. UCO is continuing to go up. What I like about it, this is the 3-month chart. Take a look at the 5-year chart and look at the profit potential. Even if it just bounces up here, that's going to double my money, right? So we'll see which way this goes. But this is where UCO had been a few years ago. It's since dropped. It's found a trough. It's been mostly green candles lately in recent months. And we'll see for position trade. I'm position trading oil because I want to let these guys go for 6 months, 8 months, a year and see where they head here. But UCO has lots of upside potential. So that's one chart I like that I'm trading right now. For our picks of the week, I wanted to start off by giving you a couple of picks that my Swing Scans members got. Let's put this on the 3-month chart. Swing Scans members got, this is the 3-month chart. First one is CRZO, and these are both oil plays. My Swing Scans members got CRZO last week. I'm giving it to you guys as a freebie this week. Again, if you'd been a Swing Scans member, you would have gotten an earlier heads up on this. But anyway, CRZO has a really good breakout pattern. This is what I call an acceleration ramp. You may have seen this when I speak at the Money Show events or my JV partner events. You got a kind of a steady uptrend week after week that all of a sudden does a minor gap or a large green candle. Remember, that was my tip of the week. A large green candle and hockey sticks on up to new highs. We got a 45-degree angle breakout, so we want to see if it continues to take out new highs in CRZO. Next up to bat, a pick that my Swing Scans members got 2 weeks ago and a week ago was WLL. And let me ask y'all just a quick question here. I just started this feature, but how many of you would like to continue to see, for example, a winner of the week? Show of hands. I got a lot of requests for this, but people wanted to see examples of recent winning alerts, and I think that's helpful. I mean, I do a $7 3-week trial, but in addition, I think the chart patterns is a good educational tip, and also kind of doubles as an alerts type of thing for you guys to see free, is a winner of the week for both the swing trade, like WLL has been for us. What a rock star chart. That's one of my favorite charts in the whole frickin' stock market, WLL. Because look how continuous it ran, from 24 up to 50. It doubled, right? So, and not one of these pop and drop cheap stocks. It's a continuity play, a continuous uptrend. These are really easy to scale into or position size every 2, 3, 4, 5 points. So that's good for that. And for day trading, my live room members' winner of the week chart was Biozun, BZUN. I told them to go long 48.30 on Thursday, day before yesterday. Back when it was down here, I said 48.30 long trigger. Do the math. How much money could you have made had you taken that alert? So anyway, I think a winner of the week is a good way to build a sense of urgency and value and show you some examples of good charts. So anyway, those are a couple of picks you guys might want to keep an eye on. These are picks my Swing Scans members got earlier. You should join Swing Scans at www.swingscans.com if you're not a member. It's my most popular service, CRZO and WLL. For those of you who trade cheaper stocks, maybe you're saying, I can't afford $30 a share of stocks. I can only trade cheap stocks. If you're new to trading or you've got a limited trading account, no shame in that game. The only shame is staying there. You want to build your account equity, and you may want to start off with some of the cheaper stocks. My Small Cap Scans members got this winning trigger, winning breakout chart last week. GLUU, the ticker. And I give that to you as my gift this week. GLUU, you may want to keep an eye on this to see if it breaks north of 6. What a chart. And again, this is that same pattern, an acceleration ramp, where you've got a steady uptrend that hockey sticks into a big breakout. And for more on learning about how to swing trade these kind of charts, the trick with cheap charts is finding continuous uptrends. It takes a lot of work to find because most of them are very haphazard and pop and drop and uncertain. What we want is continuous trends, so not only do the breakouts have a better likelihood of continuing for you once you put on the trade, but you're also able to scale in or build the trade over time. Maybe you do a few hundred shares on the front end, then you add a few hundred shares once it runs up a point or so and build the trade over time. So you can only do that with charts that have continuous trends like this one. So you get a steady uptrend, large minor gap. This is a small great gap, a large green candle, 1, 2, 3 large green candles, and it's up, up, and away. So those are some tickers that my members got, and I'm giving to you guys a week later because they still look good for the upcoming week. So keep an eye on those. Got a few minutes left here. What else do we have? Let's see. I wanted to thank all of you for being here. Remember, our S&P is climbing up out of support. One of the things that I think can help you as a trader is be very finely attuned to the, not only the profit potential, but the risk and how to scale in or position size into winning trades. That's what I do whenever I trade. I put on small pilot trades. One of the biggest mistakes traders make is they trade too much equity or too much size for their account. If you're trading options, let's say you're selling puts or buying calls or doing diagonals or spreads or whatever, and you're looking at trading options contracts, make sure that you're, say, usually not doing more than a couple of contracts on the front end, or lots. If you're trading Forex, maybe a couple, 3 lots on the maximum on a swing trade on the front end. For day trading, you shouldn't be day trading more than 1,000 shares. 300 shares is fine. That's how I learned back in the 90s. 300 shares is my average share size. Trading small size, less than 2 to 5% of your account equity. One of the biggest things that gets traders in trouble is they'll trade, if you got a $30,000 account, you shouldn't be trading a position that cost you $10,000 worth of capital. That's a third of your equity. Make sure you're doing what I call pilot trades, or you're spraying out or throwing a lot of darts at the market with small test trades, and then build into trades or position size into the ones that work out. And the other half, or whatever, the trades that don't work out, that's what break even or small stops are for. So that makes sense. For those of you who trade currencies, the US dollar to the Japan yen is the single best breakout chart in the Forex market. The dollar yen is doing good, climbing to just under or just near 111 resistance. So the US dollar to the Japan yen is the strongest uptrending currency chart of all the ones that I follow, at least. And it's got a nice continuous 5-day uptrend. So we'll see if that takes out new highs. If you're a currency trader, make sure that you're trading new high charts as the dominant theme, just as with stocks, ETFs, and other instrument categories. You want charts that actually are likely to attract. You want to look at charts like magnets. You want charts that are likely to attract new buyers at new highs, not charts that are going to reject new highs or do false breakouts or chop around. What you want is charts that are continuous. Look at other oil sector instruments like Halliburton, British Petroleum, the oil holders. They're all skyrocketing on up. So oil is the biggest standout sector right now, with energy a close second, and biotechs and pharmaceuticals third place. But oil is it so far until it isn't. Let's do a quick interactive question here. If you were long WLL, one of the recurring themes, we're going to wrap up with this. I've got a few more minutes left, so I wanted to give you a couple of quick tips. Think a lot more about your exits. How do you exit a trade? Once you're in a trade and it's in the money, let's say you're up $800, $1,100 in a trade, how do you manage the exits? It's your exits that are the most important part of your trading life, not your entries. And that's contrary to what the industry kind of spouts out there to traders. It's all about magic chart patterns and magic entries, and they neglect the exit side of it. But that's where your profit or loss is made. So make sure that you spend a lot of time. Where would you trail a stop if you're in a winning trade? Let's say you're one of my Swing Scans members and you're in the money. Boom, flawless victory. You're in the money, ka-ching, we're happy campers, right? Let's hear that sound effect, ka-ching. Ka-ching, we're in the money. Where are you going to lock in profit and trail a stop? Because it does you no good if you got in at 42, let it run to 52, and then F up and let it drop back down to 42. That would be what a freaking moron does. Traders are in it to take money out of the markets. I'm in it for the money. I'm not in it for, technical patterns. Those are the decision-making tool to get me into a trade, but the exit is all based on the money. So, wow, a lot of answers here. Seeing 50.90, 2-day low. Question from Mitch, is there a way to get a replay of Trading Open? If you're a pro member, you can get a replay of that. Keep as much as you can, 49.50, 50.80, 49.80, 50. Bottom of the tail, 2-day low, 49, 2-day low, 50, 50. You guys are all in the ballpark. I would use a loss of 50. And I would, specifically, I would be using 49.80. So congrats to whoever posted 49.80. The 20 cents under the whole number, because I don't exit at whole numbers. I give it a couple of a couple of dimes in case it finds support or chops around within a nickel or dime of a whole number. So I would use a loss of the 50, and specifically 49.8 or so would be the exact sell stop order I would put. Say I bought anywhere on the way up on this guy, that's where you'd get out, up here. The incorrect thinking would be to say, well, Ken, you've got to give it some wiggle room, some shake. No, you don't. You've got to take money. Be real clear on that. Real clear on that. You want to take money out of the market. So, at least I found in training tens of thousands of the world's traders now, and my training reaching so many more on video and articles and stocks and commodities and the rest of it. Your goal, look at my YouTube video on the P&L indicator. I use charts to get in, I use the P&L to get out. So either a loss of 2 days of support at 50 or a sensible 2-point trailing stop, which is also 50, all makes sense. That would be the trailing stop. But how I actually trade, and that's kind of the visual technicals that I use, but how I actually trade in my accounts, whether it's my Interactive Brokers or my Fidelity or my Ameritrade account, is a percentage of unrealized P&L. If I'm up in a trade $1,100 unrealized P&L and it gets back down to $1,000 unrealized P&L, I'm going to close out the trade regardless of what the chart looks like, because I want to take the money out of the trade. So start thinking about that. I think that can really help your trading is, protect 80% of your, or so, at least 80% of your unrealized P&L. So, for example, let me give you a quick parting thought here. We got a couple of minutes left. Let's say your unrealized P&L in a swing trade or a day trade is, say, an even $1,000, okay, for kicks and giggles. You're $1,000 in the money, unrealized P&L. At that point, your energy as a trader should be focused on your brokerage account management, not the chart. Ask any professional trader, ask any of my institutional clients, ask any Wall Street trader, ask any guy who's traded millions of dollars worth of stocks and ETFs and all that. If you were up $1,000 unrealized P&L, what would be the most pain you'd take, or heat or pullback you'd take in that unrealized P&L number? If anything, you should be graphing, and this is a good concept I just came up with, you should be graphing your unrealized P&L number and use that graph to exit, not the price action of the chart. Your unrealized P&L, that's actually a revolutionarily brilliant, smart idea. You should be graphing your unrealized P&L and use that as an exit indicator. So if your graph of your unrealized P&L chart is up at $1,000 and now it's starting to drop, how much are you going to protect? At what point would you go to cash? And again, you're not looking at the chart price action technicals, you're looking at your P&L chart price action technicals. Where would you exit the trade? If you're up $1,000 in a trade, how much of that do you want to take out guaranteed? Because you're playing with Wall Street's money, you want to take the money and run. You don't want to screw around and wait for that $1,000 to come back down to zero, right? Because that's work for nothing as a trader. Let's see some numbers. I see keep 800, keep 900, $1.50 loss max, 100. Yeah, I wouldn't give back more than 100 or 200. You're right. So maximum would be 800. More likely for me would be, say, 850, 900. So if my unrealized P&L in a trade is $1,000 green, if it gets back to 900, I'll get nervous and very likely just go to cash, because I can always rebuy a new high. 800 would be the maximum drawdown I'd use on unrealized P&L in a trade, at 20%, like I said, 80% of the trade. So once you're in the money in a trade, the goal is to take the money and run. You know, don't let your winners run is great when you get a good chart like this, but a lot of times your charts don't look this good, right? So your goal as an active trader is to be profitable over and over again. It's a numbers game. You're just trying to, you know, get as many occurrences, as many shots as you can at the market to intelligently sweep profit. So if anything, you should be using an Excel spreadsheet and graphing the unrealized daily P&L either in your account or preferably on a trade-by-trade basis. And once that account balance or that trade balance, your equity curve in that individual trade starts to drop and pull back, that should be your decision making for the exit. Okay, and of course that'll correspond or correlate with the price action in the chart, but my point is start thinking a little bit more about the money and a little bit less about the chart technicals. They're both important, but the chart technicals are valuable primarily as a visual scanning tool to qualify the volatility. You know, the point range of the chart is absolutely critical. You got just a minute left, but the point range and managing your exit on the P&Ls is really important too. So anyway, I hope that makes sense. It's a good honest tip, based on real money trade experience. So CRZO is good, WLL is good, GLUU for cheap stock is good. Those are the kind of charts I like to trade, at least because they have better continuity. So thanks everyone for being here. I do appreciate it. I got a few comments on the server. You guys said I should smile more. So I've been watching a lot of Jimmy Fallon late night monologue clips on YouTube. So he smiles a lot. And he's a funny guy. So I got to smile a little more. So thank you for that. And some of you said I talk a little fast. So I will try and slow that down just a bit. But anyway, exciting stuff. Well, thanks, and great tips. Great insights and tips. Don't change a thing, just be you. Thanks, Trey. Great info, thanks. Hey, you're welcome, Mitch. All right, another good comment from a trader. Keep it all and buy back if it goes up again. Yeah, there's no shame in taking the money and run. Oftentimes, I'll leave you with this thought. A parting thought for the world's active traders. Sorry I can't answer all the comments and questions. They're just scrolling on by. I got so many of you here today. As usual, I apologize in advance for not being able to answer all the questions because there's so many of you, and I've got to do swing scans in just a few minutes. If you do have questions, you can ask for those of your swing scans members there. But the parting thought is, make sure as you're looking for trade setups, there's no problem with, my best winning trades in my own actual trade accounts is they always feel exits have been early. I always feel like I'm done with the trade already. Was that it? Very much like being on a roller coaster ride and you wait in line forever and then it's over in 2 minutes, or a theme park ride I haven't been to a theme park in a decade, but whether you're going to Disneyland or Universal Studios or whatever, you stand in line, you let the trade work out, and then you go through the ride and it's over in 2 or 3 minutes. You're like, it's over already. That's the feeling you should have as an active trader to lock in profits. Good trades feel early for the exit. It doesn't feel like it's obvious because then it's too late. It feels like good successful trades are exited into buyers, so the buyers are still around. Don't wait for it to have a big red turnaround and then you're trying to scramble for an exit. Sell into buyers. You can always collapse the trade, go to cash, whether you're swing or day trading it, and then go back in if it does take out new highs with the small safety buffer, 30 to 50 cents above the current price action. That's a really good, valuable tip, so I hope that helps. So you guys have been amazing. Thank you so much for your support and your kind participation. It's always fun to see so many of you here. I've got to get going. I've got swing scans coming up in just a few minutes. I hope this has been helpful. I like to give you good, honest tips, and I'm responding to a couple of comments from you guys. You want me to stop bashing competitors, so consider that done. And stop talking about my credentials. Notice I didn't do either one today. No competitor bashing and no talking about my credentials. I just want to focus on technicals. Does that make sense? Good, honest trading strategies, and just get on with it already, Ken, and give you good, honest intel for chart pattern breakouts and how to trade them. So thanks, everybody. Appreciate it. I have listened and I've heard. We got over 400 responses on the survey and hundreds of comments. So thank you so much. Hope that helps. So oil, ride oil, and at least I'm going to continue riding oil until the party's over. But we may just be getting the party started. We've got big runs in the oil sector. Let's see if it continues on. So take care, and until next time, I'm Ken Calhoun, your humble host, coming at you live from Trade Mastery with another live broadcast episode of Trading Week Ahead. I'll see you guys next Saturday. Until next time, trade with passion, trade with itty-bitty tiny stops, play the field, and let's go get them. Take care and do well out there. Have a relaxing rest of the weekend with family and friends. Thanks for being here. And swing scans coming up in just a few minutes. So all of you who are swing scans members, I'll see you guys as we continue on with even better charts coming up shortly. Bye for now.